The year 2025 was supposed to be a victory lap. The year the economy recovered, inflation cooled, and growth returned. But look closer, and you'll see something different. Beneath the glossy headlines and record-breaking stock prices, the real economy is gasping for air. Factories are closing, workers are vanishing from payrolls, and families are drowning in credit card debt just to survive. What the media calls a soft landing isn't recovery, it's denial, the calm before the collapse. For months, the data has been whispering what politicians refuse to say out loud. The recession isn't coming, it's already here. Prices remain high even as wages stagnate. Corporate profits rise while jobs disappear. The illusion of prosperity is being kept alive by debt, stimulus leftovers, and creative accounting. Meanwhile, the Federal Reserve, out of ammunition, is pretending that tightening policy can undo decades of excess. It can't. This isn't a typical downturn. It's a controlled implosion, a slow-motion unraveling of a system that has run out of real growth, real innovation, and real trust. Every number that looks good is being propped up by a worse one hidden beneath it. The stock market boom is debt. The GDP growth is inflation. The strong consumer is broke. The world keeps asking when the next crash will begin. The answer is uncomfortable. It already has. Every headline tells the same comforting story. The economy is strong. Growth is back. America has avoided a recession. But these are not truths. They're talking points. The so-called resilient recovery of 2025 is a carefully managed illusion, built not on productivity or innovation, but on debt, manipulation, and delay. It's the same trick performed in every dying empire. Borrow from the future, spend it today, and call it success. The stock market sits at record highs, yet it's fueled by borrowed money and desperation. Corporations have spent over $900 billion on stock buybacks, not to reward workers or improve production, but to inflate share prices and executive bonuses. It's not growth. It's arithmetic fraud. GDP numbers look impressive on paper, but more than 35% of that growth comes directly from government deficit spending, which is simply the country going deeper into debt to pretend it's thriving. Meanwhile, the job market that politicians love to celebrate is quietly hollowing out. Official unemployment stands at 4.3%, but the real picture tells another story. Over 1.9 million Americans have been unemployed for more than 6 months, the highest long-term joblessness since 2013. The participation rate, the share of working-age adults actually employed, has fallen to 62%, one of the lowest in modern history. This is not prosperity. It's paralysis dressed as progress. The corporate world knows it. Behind the quarterly earnings calls and polished investor presentations, the layoffs continue. Amazon, UPS, Google, and Meta have quietly slashed tens of thousands of jobs. UPS alone cut 48,000 positions, even as it announced record profits. Why? Because artificial intelligence and automation now replace human labor faster than new jobs can appear. What we're calling productivity gains are actually mass layoffs disguised as innovation. The illusion extends to trade and industry. Tariffs have reached levels unseen since the Great Depression, roughly 18.6% on average imports. Those costs are passed directly to consumers, raising prices and strangling small businesses. 4 straight months of manufacturing job losses have erased much of the recovery celebrated only a year ago. Factories in the Midwest stand half idle, while the media insists everything is fine. Consumers, meanwhile, are maxed out. Credit card balances have surpassed $1.3 trillion, and delinquencies are at their highest point since 2009. Households are using debt to pay for groceries, rent, and utilities, the most unsustainable stimulus in history. The result is an economy that appears to be expanding while rotting from within. The illusion of growth depends on one thing: confidence. As long as people believe the numbers, the machine keeps running. But confidence is fading fast. Every new layoff, every missed payment, Every broken promise chips away at the story. Growth without productivity isn't growth, it's inflation. And when that illusion finally breaks, the collapse will feel sudden, even though it's been happening for years. The backbone of any economy is its workers. But in 2025, that backbone is breaking. The government keeps repeating that jobs are strong, but behind the press releases, the labor market is collapsing in slow motion. The new jobs being created aren't the kind that build wealth or stability. They're low-wage, short-term, service sector positions that barely cover the cost of living. The middle-class careers that once defined the American dream are disappearing, replaced by a revolving door of part-time gigs, contract work, and algorithmic scheduling. The so-called gig economy is no longer a path to freedom. It's a symptom of desperation. Millions of Americans are juggling multiple jobs to survive, not to get ahead. Their incomes fluctuate weekly, benefits are non-existent, and taxes hit harder than ever. The Bureau of Labor Statistics reports millions employed, but it doesn't tell you how many of them are driving for delivery apps, freelancing for pennies, or competing against AI for digital scraps. The labor market hasn't adapted. It's been cannibalized. Even those with degrees and experience are no longer safe. College graduates, once the most secure group in the workforce, now make up nearly 1/3 of long-term unemployed Americans. Over 1.9 million people have been jobless for more than 6 months, and many have given up looking entirely. That statistic doesn't appear in the headlines, but it defines the silent crisis. The system no longer rewards hard work or education. It rewards cost-cutting and automation. Meanwhile, the public sector, once a stabilizing force during downturns, is shrinking rapidly. Nearly 300,000 federal jobs have been marked for elimination, with around 200,000 already gone. State and local governments, buried under rising pension obligations and falling tax revenue, are freezing hiring and cutting essential services. Every pink slip in the public sector creates ripple effects, from local diners to car dealerships to housing markets. The disappearance of one paycheck reverberates through dozens of others. The damage is uneven but widespread. States like California, New York, Michigan, Ohio, and Pennsylvania, together representing nearly 1/3 of the U.S. economy, are either already in recession or hanging by a thread. California's tech layoffs, New York's financial exodus, and Ohio's manufacturing decline paint a clear picture. America's regional economies are falling one by one. What used to be cyclical downturns are now structural contractions. The system isn't resetting, it's decomposing. The corporate world calls it efficiency. In reality, it's slow-motion liquidation. Companies are discovering they can maintain record profits with half the staff, or none at all. Artificial intelligence and automation allow them to reduce payroll while boosting productivity metrics, at least on paper. But an economy can't survive when its workers are treated as expenses instead of participants. This is the paradox of 2025. The fewer people earn real wages, the more profitable the system appears. The metrics of success have inverted. Productivity means fewer jobs. Growth means higher debt. Stability means stagnation. The workforce collapse isn't coming. It's already here, hidden behind a smokescreen of manipulated statistics and political spin. And when those numbers can no longer disguise the truth, the real unemployment rate will hit harder than any crash. Every empire eventually drowns in its own promises, and for the United States, that promise is debt. The system was built on the idea that borrowing could replace productivity, that deficits didn't matter, and that the world would always trust the dollar. But in 2025, that trust is fading fast, and the math has become impossible to ignore. The U.S. national debt has now surpassed $38 trillion, and the government is adding roughly $1 trillion every 100 days. That's not a typo. Every 3 months, America borrows another trillion just to keep the lights on. The interest payments alone are projected to hit $1.3 trillion per year, exceeding what the nation spends on its entire military budget. Washington isn't paying down the debt anymore. It's borrowing money to pay interest on old borrowing. That isn't policy, it's a sovereign Ponzi scheme. And it's not just Washington. American households are collapsing under the same addiction. Credit card debt has reached an all-time high of $1.3 trillion, and delinquencies have surged to levels not seen since 2009. Auto loan defaults are rising sharply, and mortgage stress is spreading across the country. The average American is using debt to buy food, pay rent, and cover medical bills. A last gasp before financial exhaustion. The consumer, once the engine of global growth, is now completely maxed out. The corporate world, meanwhile, is operating on borrowed time, literally. Total corporate debt exceeds $12 trillion, with much of it classified as junk-rated. Over the past decade, companies borrowed recklessly at near-zero interest rates. Now, as refinancing costs skyrocket, they face a brutal choice: cut workers, default, or beg for another bailout. And bailouts are becoming politically impossible. The housing market is the most visible sign of this distortion. Prices remain near record highs even as demand collapses. New home inventories are the highest since 2009, but builders keep building because if they stop, their financing collapses. Mortgage rates hover above 7%, pushing first-time buyers out of the market. Behind the facade of stability, the entire housing sector is trapped in a loop of artificial demand and unsustainable debt. When that loop breaks, the crash will be instant and irreversible. Local and state governments are trapped too. Their budgets were balanced on property taxes and sales revenue, both now shrinking. To cover shortfalls, they've borrowed heavily through municipal bonds, many of which are now under stress as interest costs rise. Towns and cities across America are quietly slashing school budgets, laying off police officers, and cutting hospital funding just to stay solvent. This is the same cycle that bankrupted Detroit a decade ago, now repeating nationwide. And beyond America's borders, the picture is equally grim. For decades, global central banks trusted the US dollar as the world's safe asset. But now, that faith is eroding. China, Russia, and even traditional allies are diversifying away from U.S. treasuries, buying gold and non-dollar assets at record pace. The share of global reserves held in dollars has dropped below 58%, its lowest level in modern history. The empire's credit line is closing. Debt was once America's secret weapon, a way to fund wars, consumption, and illusions of prosperity. But every weapon turns against its wielder eventually. The system now depends on infinite borrowing to sustain finite trust. And when that trust breaks, when investors stop believing the U.S. can pay its bills, the collapse won't start with a bang. It will start with a simple question: who's still buying? Every financial crisis begins with one domino, a small, seemingly isolated failure that triggers something much larger. In 2025, those dominoes are already wobbling. You can see it in the regional banks struggling to stay solvent, in the corporate defaults quietly rising, and in the consumer debt delinquencies spreading through households like wildfire. The system is holding together not because it's strong, but because everyone is pretending it is. The moment one piece falls, the entire illusion goes with it. The first and most vulnerable sector is banking. The collapse of Silicon Valley Bank in 2023 was treated as an anomaly, but it wasn't. It was a preview. Hundreds of small and mid-sized banks across the country are now sitting on hundreds of billions of dollars in unrealized losses, tied to long-term bonds purchased when interest rates were near zero. Those bonds are now worth far less. If depositors panic again, and they will, the domino effect will move faster than any rescue plan can. The FDIC's insurance fund, which can only cover a fraction of total deposits, will evaporate in weeks. Next comes private credit, the shadow system of loans that operates outside traditional banks. Worth over $2.3 trillion, this market has exploded in size, fueled by low rates and investor greed. It's opaque, unregulated, and dangerously interconnected. When one major fund defaults, it will take dozens more with it. The crash will look nothing like 2008 because it won't start in Wall Street towers. It will start in the hidden corners of the financial world, places where the regulators don't even know the exposure. Meanwhile, small businesses, the true foundation of employment, are being crushed by rising costs, collapsing demand, and disappearing credit. Without access to affordable loans, they can't survive. One by one, local restaurants, hardware stores, farms, and trucking companies are closing. When they go, entire communities go with them. This is how recessions turn into depressions, not through one dramatic event, but through a million quiet deaths. The energy and agriculture sectors are next in line. Energy demand is collapsing as factories cut back and automation reduces industrial consumption. Refineries are operating below capacity, oil prices fluctuate violently, and investors are fleeing the sector. Farmers face a similar nightmare: rising costs, falling exports, and extreme weather. The result? Bankruptcies at the fastest pace since the 1980s farm crisis. The food system is becoming as fragile as the financial one. Globally, the contagion will be brutal. The United States still anchors the world's credit system. When it falters, Europe, Asia, and emerging markets will all feel the tremors. Supply chains will seize, currencies will swing wildly, and international trade will contract. Globalization, already on life support, will die for good. That's how collapse works in the modern world. It's not a single crash, but a chain reaction. The banking domino hits credit. Credit hits small business hits labor hits consumption, and by the time the public realizes what's happening, the final domino, confidence, has already fallen. The most dangerous part of any collapse isn't the market crash. It's what happens in people's minds afterward. Economies run on confidence, but once trust is broken, no stimulus, no bailout, and no speech can bring it back. In 2025, that collapse of belief has already begun. You can feel it in the tension on the streets, the anger in online forums, and the exhaustion in conversations across America. The numbers may look stable, but emotionally, the country has already fallen apart. People no longer believe in the system. They don't trust the media that tells them everything is fine. They don't trust the politicians who promise recovery while cutting social programs. And they certainly don't trust the banks that quietly profit while pretending to protect the public. Every promise made since 2008, reform, stability, never again, has been broken. The result is a nation that feels betrayed by its own institutions. That loss of faith is visible everywhere. Consumer confidence has dropped to its lowest level in more than a decade. Small business sentiment is collapsing. Families are skipping medical care and groceries just to pay rent. Student debt delinquencies are rising again after brief government pauses ended. The optimism that once defined the American character, the belief that tomorrow would always be better, has turned into quiet resignation. Even the wealthy are uneasy. They sense that something fundamental has shifted. Billionaires are building private bunkers, moving assets offshore, and buying property in New Zealand, Singapore, and Switzerland. They call it diversification. In truth, it's fear. For the first time, even the winners of the system are acting like they don't believe in it anymore. The psychological collapse is self-reinforcing. When people stop believing, they stop spending. When they stop spending, businesses fail. When businesses fail, layoffs follow. Fear becomes policy, and policy becomes paralysis. The government responds with new programs, new stimulus, and new promises, but each one works less than the last, because belief itself has become the scarcest commodity in America. Socially, the fracture lines are deepening. Mental health crises are exploding, suicide rates are rising, and public trust in government has fallen to near historic lows. Every major survey shows the same trend. People are scared, angry, and tired of pretending. When a population stops believing that hard work leads to stability, or that their leaders can be trusted to fix what's broken, an economy doesn't just slow down, it disintegrates. And this is the final irreversible stage of decline. Markets can recover, banks can be recapitalized, debt can be restructured, But once trust dies, the system itself cannot be saved, because an economy isn't made of dollars or data, it's made of faith. And in 2025, that faith is gone. The collapse of 2025 isn't a crash in the traditional sense. It's the long overdue reckoning for decades of borrowed time and borrowed belief. America didn't stumble into this moment. It engineered it, one bailout, one stimulus, one denial at a time. Every financial rescue since 2008 was a bet that the future could absorb the pain of the present. But the future is here, and it's out of room. The warning signs were never hidden. The debt clock ticking past $38 trillion. The $1 trillion added every 100 days. The crumbling infrastructure, the vanishing middle class, the hollowed-out job market. Everyone saw it. Everyone ignored it. And now the system that once prided itself on resilience is being exposed as something else entirely, a facade held together by faith and inertia. In the coming months and years, the unraveling will accelerate. Banks will consolidate or collapse. States will default or beg for federal rescue. Corporations will restructure through mass layoffs, while small businesses vanish completely. The US dollar, once untouchable, will face challenges from every corner of the world: gold, digital currencies, and geopolitical rivals who no longer believe in American solvency. The age of the dollar as the world's unshakable foundation is ending. But this reckoning isn't just about economics. It's about identity. For generations, Americans believed their system was different, too advanced to fail, too democratic to corrupt, too rich to collapse. That myth is dying. What replaces it will depend on what the nation chooses to remember and what it chooses to deny. The math cannot be rewritten. The trust cannot be borrowed again. The next chapter will be written not by policymakers or central bankers, but by the consequences they created. There will be no clean slate, no soft landing, no miracle recovery, only the cold truth that you cannot build prosperity on debt forever. And when the final payment comes due, no one, not Wall Street, not Washington, not the Fed, can stop the bill from arriving. The reckoning isn't coming. It has begun. History doesn't announce when it's ending. It just changes the rules. What we're living through now isn't a moment of crisis. It's a change of era. The financial system that once powered global prosperity is breaking under the weight of its own excess, and the world that replaces it will look nothing like the one we grew up in. There will be no sudden crash, no single event to mark the turning point. Instead, it will fade quietly, paycheck by paycheck, debt by debt, promise by broken promise, until one day, people will realize the old economy is gone. In 2008, money printing and bailouts postponed collapse. In 2020, lockdowns and stimulus checks disguised it. But in 2025, there's nothing left to hide behind. The debts are too large, the faith too thin, the system too fragile. This time, the empire won't be saved by policy, because the failure isn't political or financial, it's moral. You can't print trust, you can't borrow time. And when a society forgets that truth, it doesn't just go bankrupt, it disappears. The collapse of 2025 isn't the end of America's economy. It's the mirror reflecting what it became.